Welcome to Financialize. My name is Iron, and I will be your guide through this series of articles and videos created to expand your mind on the topics of finance and the economy. Throughout our content, we will focus on common misconceptions, distractions, established theories, and occasionally, equity analysis. Today, we will focus on the Canadian housing market and why Canada's '08 moment could be upon us. In our last several videos, shrinking inflation, CPI, the consumer pricing illusion, and financialization, the wrecking ball of the economy, we set the stage for most of the Western world. Financialization has led to weaker economies that are now riddled with debt at all levels, public and private. These factors, coupled with embedded inflation, have left central banks in an impossible situation. We saw that the first central bank to crack was the Bank of Canada, and for good reason. How are Canadians, who are already stretched thin, going to manage paying their inflated mortgages? Many don't realize that '08, in regard to Canadian home prices, was less than a blip. Home prices in Canada have only pushed higher over the last 2+ decades. Now imagine there was a pandemic and central banks brought rates down to zero, and you were told they weren't even thinking about raising rates until at least 2023 or 2024. You see this amazing low rate of 0.99% on a 5-year variable. But hey, they promised you we are in this together and no rate hikes for 3 to 4 years of that term. It was so tempting, but you knew it was too good to be true. So you chose a 5-year fixed rate of sub 1.5% to protect yourself. Then, out of nowhere, over a year prior to what they promised, the Bank of Canada's overnight rate surges from 0 to nearly 5%. You pat yourself on the back for not taking a variable term because those went from 0.99% to nearly 7%. You took a sigh of relief because you dodged that bullet, only to get hit by another, and now you see them reloading. This isn't an exaggeration. This isn't a movie. This is Canada. And even if you choose a safe 5-year fixed term, you still have to reprice your rate 5 times in the average 25-year mortgage amortization chosen by Canadians. You are now looking at mortgage rates still 3 to 4 times your current rate. On the horizon, you can see them setting up to take their next shot, a capital gains tax on your primary residence. For those of you who were awake, you saw this set up over a half-decade ago when you had to start reporting the purchase price of your primary residence to the Canada Revenue Agency, Canada's equivalent of the IRS. Sadly, the silver lining in this story is the CRA wants a cut of your inflated home value, kind of like how the Fed has a vested interest in keeping the equity bubble in the USA going because, hey, we need that tax money after all the spending we did. Oh, and before you scream doom porn, let's just take a look at the facts for a moment, and not just the sound bites, but the real facts. Yes, we are aware that delinquencies are near a record low, but how can't they be? Forbearance, stimulus checks, and Canadian banks don't require you to increase your payments if they are variable until your term comes up for renewal, a stark contrast to the USA. Are you also aware that nearly 70% of mortgages need to be renewed in the next 18 to 24 months? And again, we are looking at rates between 3 to 5 times higher? Of course, they are low for now. One more thing to take into account, according to TransUnion, the average mortgage balance in Canada is $349,178. That's over a $500 increase monthly at the averages. While $500 doesn't sound like a lot, most are just making ends meet now. Canadians also hold nearly 50% of the HELOC debt Americans do with only 1/9 of the USA's population. This is mind-blowing. Remember using your home as an ATM? Well, hold my beer, America. Yes, we also concede the unemployment rate is low, but it's always near the lows right before a recession or worse. The summary job market in 2024 has started off with a whimper. The Gen Z crowd is telling us they can't find summer jobs, no one is hiring, and we just saw another uptick in unemployment to 6.4% versus the low we saw in 2022 of 4.8%. Sorry, friends, but that is a trend, and this type of trend is not your friend. And while many Canadians think the bubble will last forever, we question that narrative. We have also been astonished at the hubris of the Canadian financial industry. Having both lived and worked in the United States and Canada, I have personally heard countless times the phrases, "Canadian housing has always been a bubble. Canadian banks are solid, unlike U.S. banks in '08. And probably the best one is, our lending standards are so much stricter in Canada. We could never have an '08-style crisis." All while ignoring the fact that all Canadian mortgages are variable, and that one just goes right over their heads. What do you mean? You can get a 5-year fixed? Oh yeah? Then after that, what happens? The damn rate reprices and no one, and I mean no one, is planning to pay their 25-year mortgage off in 5. So quick recap. Inflation for everyday Canadians is still too high. The Bank of Canada is lowering rates out of desperation, knowing they will likely reignite inflation further. Taxes are on the rise, and new taxes are being manifested. Rates are multiples of where they were years ago, as the majority of Canadians are required to renew, and youngsters can't seem to find summer jobs. While not a complete list of headwinds, it paints a grim picture. Okay, we can't help ourselves one more, the carbon tax. Canadian citizens produce less than 1% of the world's carbon. What exactly is this tax doing aside from making living unaffordable? I mean, Canadian business create nearly double the carbon the citizens create, yet they get a tax break. Oh, found it. That's why the citizens are paying it, to give tax breaks to businesses. Canada's '08 moment may be upon us, and few understand how quickly this could derail not just the housing market, but the entire Canadian economy, which is built on money laundering. I mean housing. At this point, if you don't own more gold than the Canadian Central Bank, that's just reckless. Please join us as we traverse the landscape of financial lies. Our goal is to provoke your thoughts on the world in front of us all while having a little bit of comical relief. We are not here to convince you that these are lies, but rather to reveal the other side of finance that has been hidden from you. In the end, you will decide if these are financial lies or not. Please support us by following us on X, YouTube, Patreon, TikTok, and Substack.